Good evening. So it's Oak Bloke here, and just wanted to catch up on gold this week. So yeah, it's that's the 1 year picture, and of course we had the high of gold here of 3,400, and it came back up to 3,400 here, 3,344 here. So currently it's sort of just slightly under, I think about 299, something like that. So still at a very, very healthy level. And yeah, considering that the whole Trump tariff event is kind of largely calmed down now, that it doesn't appear that gold is just rapidly deflating. It's every time it drops, it sort of gets pulled back up again. So it looks like there's pretty strong support for the price of gold. So yeah, so this week, seeing that the price was still very, very attractive, I bought more. So I think I was able to get these at about 51.7, something like that. And what I would perhaps draw your attention to here is that this is sort of at just under 70 pence per share. Um, and the discounts at pretty much record levels, about 26.5%. It says here 25.9, but I don't think these are necessarily always accurate. So that about 27%. Maybe I'll just share this with you. You'll have seen this from a video I did 2 weeks ago. So back then, what I pointed out to people was that was that these increases averaged. I think I said at the time it averaged about 82%. Well, today, year-to-date numbers. Okay, so I've to sort of run the numbers again. So these numbers here. Okay, so this changed since first to first. So I'm taking the new numbers here. It's now up 95.2%. So in the space of 2 weeks, it's increased. The top 10 have increased by about 13%, compared to the 1st of January. And what I've done here is just compare 2 weeks ago to today, price today. So you can see, some of them are up like 23, 24%. So West African Greatland Gold, Ora Banda's up strongly, and the only one that's down is this one here, TGG Gold. But when you look at this one, is up 346% this year. The fact it's down 6% kind of is neither here nor there, I would argue. So yeah, very, very, very attractive. I think there's a lot more upside. None of this is advice, but it certainly looks very attractive. This is my, I think this is my last article, or maybe the one before. In my I think this is where I sort of cover it as a video, and and then prior to that I sort of covered it in an earlier article. So you could just use this little magnifier. My Substack is theoakbloke.substack.com. Just put in what you're looking for, and I think this is my original article. So just under 2 months ago, but this is sort of very, very quickly. Well, obviously, it's up quite a lot, so it's up to about 25%. But what I do in these is cover sort of Aura Banda and so on. So I was just looking at news flow. So with Aura Banda, I mean, we've got this guidance of production. So there's sort of three things driving the very fast, rapid rise in price of a lot of these holdings. Number one is the fact that production is increasing. So 91% of these holdings are producers or constructors. Constructors mean that they are on their way to becoming producers. They're building their mine. They are sort of in the process of either building it or commissioning it. Um, what we see is the forward outlook is that it doesn't stop here. So this is sort of this year's guidance, that next year's guidance is for a further nearly 50% growth. So yeah, all looking very, very positive. The I think the things I would draw your attention here, obviously the track record is good, so they've managed to increase production over the past 24 months. They've seen record revenue in the last, record cash flow, and they're pretty sure they're debt free and have net cash. So all looking very, very positive. The the longer term aspect is as you can see here, that you've got the uh, you know the sort of growth in these assets. So that's all Rabanda, and you can see this is an example of a spiral excavation. So this is sort of typical to Australia and this sand mine. I mean, you can sort of see here the well, both the widths and the grams per ton are very, very attractive. 6, 10, 5, but these widths as well. So 13 meters, 8 meters, 9 meters. That means that there's like a very big chunk. They're not just having to sort of get like a very small chunk, they're getting very, very big chunks. And you can see there that they're drilling this out further to prove the resource out. So yeah, that one's looking really good. The second one, so Calibre, these are currently merging with another unit. So you can see again, production going up, costs coming down. So the second lever is that as you grow your production, typically your all-in sustaining costs drop. And this is largely down to the fact that your production gets spread, your fixed costs get spread over a large number of units of production. So therefore the amount per ounce of gold for those fixed assets to be spread across, the amount per ounce drops. So therefore your all-in sustaining cost drops. It's not that your costs have dropped, your costs might be static or might be even rising slowly, but your production is growing faster than your fixed costs, and therefore your all-in sustaining cost is coming down. And just to kind of give you an idea, I mean, obviously with selling prices at or around 3,300. So you can see here that with 71,000 of production and that cash cost, that all-in sustaining cost, that you're looking at margins of nearly 2,000 per ounce. So 2,000 times 71,000. I mean, that's 140 million, give or take. So very, very attractive. That's going to grow further, because you can see here Valentine first gold by end of Q3. So looking to sort of increase production here. Excluding Valentine is 230, 280. So they've obviously done like 71, which is a run rate of 280, 285. So that's all looking good. The idea is that Valentine will then grow this further. So this is where they're at with Valentine, and where they're heading towards is they want to get themselves to 1.22 million ounces. So that's the midpoint guidance. That'll be 40,000 with Greenstone, 200,000 with Valentine at capacity, and so yeah, that's all looking very, very exciting as well. And again, here on this spreadsheet, what I'm actually doing is just saying to myself, well, this is the gold today. So I've gone with the lower guidance there, which, is 230 to 280. So I've just gone 230. And here I've said, well, that based upon a 1600 margin, which again is sort of saying, 1390 cost, 2,980 sell price. So that's about 10% below the price of gold. So that kind of comes out at 368 million margin per year. Well, if they can grow their gold to 1.2 million ounces a year, so I mean this being kilo ounces, as you can see up here. So this would be 1.2 million ounces. Well, that kind of gets you to a $3.36 billion dollar margin. Like that is a lot of money, and that's kind of why we're sort of seeing these kind of numbers. So it's grown from 223 to 313, so 40% growth in 2024, and this one is the second largest. So this makes up 8.5% of gold GPM. So let's move on to the next one. So just come out of there and into the next one. So the next one, Emerald. So this is the one where there's two mines in Australia. Well, one producing mine, one early stage mine called Dingo, Dingo Range, and then there's also a Cambodian project as well. So they tell us that their drilling continues. Okay, at so you've got Okvau, you've got Dingo, and the producing mine is so Okvau is Cambodia. The producing mine, trying to think what it's called. No, I'm just trying to remember. Yeah, Okvau is the producing mine, and then Mermo is the project mine, and then Dingo is the Australian mine, which is also a project. But you can see that they're looking to develop this, so they are sort of at that point of development. So that will get them into sort of two producing projects, with the idea that Memot, is earlier stage, so it's feasibility stage. But yeah, look at the like 0.6 meters at 85 grams per ton. Some really nice results. 12 meters at 5, 13 meters at 5. So 2 meters at 24.6. So some really, really, really strong results. And yeah, so that one also looks good. And that's the producing mine there. So like a huge crater in the rainforest and you can see here, the strategy here is to become a 300 kilo ounce per annum producer. So again, if we just sort of see, this is now it's this number here was taken from a different presentation, but that yeah, that's sort of what they were saying that they were going to target. So that again just grows. I mean, that one 10x's, that one 5x's, and that one sort of at least doubles. And actually, that's the third factor. So it was the increased production, it was the decreased AISC, so therefore a larger margin. But then the third thing is just the fact that the gold price at 3,300, and I mean, I don't want to sort of start thinking, oh, well, what if it goes to 4,000? What if it goes to 5,000? But there's plenty of people out there saying that it could, or it will, or it probably shall. Who knows? I mean, I think if even at 3,000. And as I say, there's strong support for 3,000 gold because there's central bank buy-in, there's renewed interest in ETFs, and a lot of investors have got very, very, very little exposure to gold. And I think there's a lot of people that are very heavily exposed to things like crypto, where maybe, when you think about it, and you think about the price of gold and the price of crypto. So, let's just quickly look up. Um, let's do something here to let's add a comparison and oops, Bitcoin. I just want Bitcoin. I don't want. Oh, that's a bit annoying. Let's see if I can add compare. I'll tell you what, let's do it the other way around then. So if we crypto, so if we go to Bitcoin, which gives us that, so 104,000, and we say, let's add gold. Here we go. So it's interesting because, if we say over 10 years, that gold and Bitcoin are quite closely aligned, although, I say closely aligned, back here, gold was 50% higher, and now at this point here, comparing this versus this, that these are sort of actually quite different. So yeah, like that. Yeah, so I would say that gold is now sort of cheaper relative to Bitcoin, and I suppose what we could do is we could say, well, today 104 600, divide that by 3,300, so you would get 31.7 ounces of gold for one Bitcoin. Whereas, I don't know, let's say go back 3 years. So what would it be? It would be here, and it would be sort of like here with end of May. There we go. So Bitcoin was 1,400. No, sorry, apologies. Gold was 1,400. Bitcoin was 22,820. So 22,820 divide by 1,400. So the number of Bitcoins relative to gold has doubled. So the price of Bitcoin relative to gold has doubled. So today you can get 31.7 ounces. If you sell one Bitcoin, turn it into US dollars, and then buy gold, you'll get 31.7 ounces of gold. Whereas if you did the same thing 3 years ago, you would have got 16.3. But equally, if you had I won't say a ton of gold because you'd be very rich, but if you had 16.3 ounces of gold back 3 years ago, sold that, bought one Bitcoin, you'd have doubled your money today by converting it back again. You'd have twice as much gold. So, I think in the world we are in, personally, that sell Bitcoin and buy gold is the better trade there by a long way. But there we go. Everyone's different, and everyone has their own ideas. So let's move on to number 4. So number 4 in the GPM list. So this is West African resources. So again, these are interested in these are planning to become a 400 kilo ounce producer. Or 420, and again, they are heading that way. Their production increased in their latest update, so that's all looking good. This is West African Resources is based in Burkina Faso, West Africa. So that's all looking good. First gold is planned for a project called Kiaka, and commercial production expected. Production of 100 to 150,000 ounces. So yeah, all looking good. And as you can see, it's quite large scale stuff. So that's all positive as well. And again, some very attractive attractive costs and attractive resources. So 12.5 million ounces of gold resources. So these are sort of your inferred and indicative, whereas here the reserves, these are your proved and probable. So they've got 6.2 million proved probable, generating lots of cash. See, profits have grown strongly. So all looking good. Similarly with Greatland, these guys are developing Javieron. They've got the Telfer mine that's producing about 120,000 ounces like to say a month, but I might be wrong on that. It's yeah, so it's yeah, the two-year outlook is about 300 kiloounces, then with copper as well, so 7 to 11,000 tons of copper on top. So it's yeah, so it's not a small operation, but once Javieron comes online, then it's going to be a bigger project again, about 50% bigger. So it'll be at about 500 kilo ounces again. So again, that's sort of coming online in due course. So that's Greatland, and Greatland is up. Greatland's up 135%, so that's looking good. This one, Mag Silver, so this is now has got a bid for I think it's 20.54 per share. The share price today has gone up, but it's still below the 2046, so it's gone up to 1860, so it's gone up 4%. It's up 29% this year. So that should go to or close to that price there. G Mining's the next one, so this is number 8 in the top 10 holdings, I think. No, sorry, number 7. So again, this one is expanding. So they've got Oko in Guyana, which is this one here, and then they've got 2 Brazil. So this one's in commercial production. So this little gold star here. This one is in advanced, and this one is the earlier one in development. So the idea is that kind of similar really to the other ideas, that production's going to double from today's I think it's 200 to 500, so by 2028. So that's all looking good. The yeah, that's progression of the share price. That's progression of the market and progression of the gold price. So it's outperformed by quite a bit, shall we say. So yeah, that one's another one that looks really good actually. Next one. Now this one blew my socks off. It's got some competition in the rest of these top 10, but this one just absolutely. So check this out. So they had 3.4 meters at 466 grams per ton. So what that means is in a ton of ore that they've got in that bit there, 0.5 kilo of gold, which is just, I mean, when I say 2 grams per ton of gold is economic, you're not going to make vast amounts of money at 2 grams a ton, but you will, you'll at least break even and make something of a return. So 466 is highly profitable. Now, obviously, that is only 3.4 meters, and then we've got another section that's within that 3.4. There's 2.4 that's even higher. This one was 4.7 kilograms per ton, which again is just that's the stuff of dreams. Obviously, it's only a small and it is quite deep, but that does exist. And then this one as well, 1500 or 1.5 kilos. So some really strong results for this Australian um, explorer. So this is an explorer, not a developer, not a so not a producer. So this one very exciting though. The grades that they're achieving, they're finding, and it's not just the gold. They've also got SB, which is it's the rock is called stibnite, and this is the mineral. Name's gone out of my head, but it'll come back to me. So this is a credit for the gold, and this is the as I say, the name's gone out of my head. Sorry, it's late and I'm tired, but yeah, you can see some really good results here, and some very interesting drill results. And yeah, so this is just near Melbourne. So they've done a lot of drilling. Obviously, they're looking to prove this out. You can see they've got 64 above 100 grams per ton and 72 50 to 100 grams per ton. I mean, these are just incredibly good results. The word I was looking for was antimony. Sorry, the SB was, I was thinking, what chemical is it beginning with S? Anyway, it's not S, it's A, antimony. And this is a mineral that China have restricted. So this is a critical metal. Incidentally, if you've read or watched my video about ECR, this project is quite close. It's probably about 20 miles, 30 miles from the ECR mine, which is which is also sort of just north of Melbourne. So yeah, very interesting holding. The antimony particularly, that's very sought after. And not just in Australia, but in the US and in Europe. And so it's this point here that the Chinese government's going to place limits on antimony and antimony products. This puts pressure on Western defense supply chains and negatively affects the supply of the metal. So this is a real priority area. Yeah, antimony represents about 21 to 24% of the value of Sunday Creek at a 2.39 ratio. So antimony is actually more expensive than gold, just to be clear on that as well. So yeah, again, another very interesting holding. So almost at the end of these now. Collective was the last one, and Collective again, some really stunning results. 300, 200, 100, 160. Now, obviously, these are just large widths rather than high grades, but so 1 gram. But these are sort of just vast amounts of just rich ore that contains some very large, wide deposits. So obviously you can see here there's some that are much higher further down, which is so that's Collective. Again, this is the one that's up very strongly in this one's up 153%. So that's that one. So yeah, just to conclude then, I mean, for it to be at this level of discount, for the price to pretty much have, I mean, like the price, like, can you see, sort of see here, like when the NAV was what, 55p, and the share price was 50p. So this was on a sort of a 10% or 20% discount. I think it was probably, yeah, anyway, so the discount is stretched out, but the holdings are looking very good. I mean, 95% up when you actually consider, and this was sort of the reason I did this, when you actually consider these gold production values. So we're going to go from 2.2 million ounces to 5.7, over the next couple of years. And obviously these are not nailed on or guaranteed, but that's basically the plan of action at these different holdings. And we don't specifically know what these others, what the companies are here, and these other 49%, or sorry, 45% of the holdings of GPM. But based upon these top 10, that to that, and this is sort of based around, so I'm taking that quantity there, and I'm taking a gold price of, sorry, bear with me. Yeah, I'm taking a gold price and margin of 2,800. So this is kind of, again, you can sort of run your own numbers. I think here was sort of saying, well, if gold goes to 4,000, then this is kind of what it's going to look like. I mean, if it's less, because as I say, the AISC is potentially dropping because production is rising, gold prices potentially are rising. But let's say, it was just 3,000, so that would be a 1.8 rather than a 2.8. I mean, you're still looking at a near tripling of profit, or of EBITDA margin, or EBIT margin even, because the AISC should include the depreciation and the sustaining capex. So you've got a tripling there, and yeah, so this sort of share price relative to that, and then you've got to consider that you're getting it all at 27% off. So yeah, it looks attractive. So that was everything really. I've bought more of this, but none of this is advice. This is not designed to kind of tell you what to do. Just, it's what I've been thinking about, and maybe this is useful to you, but you make your own investment decisions. And but yeah, certainly for me, Golden Prospect was a very interesting share with prospects. So anyway, this is Oak Bloke signing off. Cheerio for now. Cheerio.